Have you ever looked at your bank account, seen an extra $100, and thought, I'd love to invest, but what can I really do with this? Well, get ready, because that $100 might just be the most powerful money you will ever put to work. Let's break down exactly how.
So let's just get right to it, the big question on everyone's mind. In a world of giant corporations and headlines that make your head spin, can a single $100 bill actually make a real meaningful difference? Is it even worth the effort?
So many people believe this just isn't enough to get in the game. And honestly, that's probably one of the biggest myths in all of personal finance. It's the little voice that keeps so many of us on the sidelines, waiting for that perfect moment to start, a moment that, let's be real, almost never shows up.
But what if I told you that first $100 is actually the most important investment you will ever make? No, it's not going to make you rich by next Tuesday, let's get that out of the way. But it kickstarts something so much more valuable. Let's dig into why. Okay, so this whole myth really comes from a simple psychological block. We're sort of conditioned to think that investing is this exclusive club for the ultra-wealthy. We see stories about billionaires and we think we need this massive pile of cash just to get a seat at the table. But that's the old way of thinking. It's just not true anymore.
In fact, starting small has some serious hidden superpowers. It lets you learn the ropes, build confidence, and tap into one of the most powerful forces in the universe of finance, all without taking huge, scary risks. And it all boils down to one simple, beautiful concept. And that concept is compound interest. You've probably heard of it, but it really is like magic. It's when your money starts earning money, and then that new money starts making its own money. It's a snowball effect. It's a simple idea, but seeing it in action, that's where things got really exciting. So check this out. On the left, you've got your $100 just sitting there in cash. 10 years later, what do you have? Still $100. And actually, it's worth less because of inflation. But look at the right. That same $100 earning an average 8% return has grown into something much bigger. You see the gap? That's not because of the initial amount. It's because you gave your money time to work for you. But honestly, the real win here goes way beyond the numbers on a chart. That first $100 is your ticket to building the habit of investing. It's your low-risk training ground to learn how things work, to get over that initial fear of hitting the buy button, and to get comfortable with all the incredible tools we have at our fingertips today.
Okay, so you're on board, you're ready. But the big question remains, where exactly does that $100 go? Well, the great news is you've got some amazing, super accessible options. Let's walk through 3 of the best places to start.
All right, first up, we have what I think is one of the biggest game changers for new investors ever, fractional shares. Think about a massive company like Apple or Tesla. A single share can cost hundreds of dollars, sometimes more. For a long time, that locked a lot of people out. But fractional shares let you buy just a little slice of one share. So instead of needing $1,000, you can take $20, $50, and own a real piece of that very same company. This is absolutely perfect for a small budget. Not only can you own a piece of the world's biggest brands, but you can also use your $100 to buy fractions of several different companies. That gives you diversification right away. And with global platforms like Interactive Brokers and eToro, this is available to pretty much everyone everywhere. Next up, we have what is probably the single best friend a beginner investor can have, the Exchange Traded Fund, or ETF for short. The easiest way to picture an ETF is like this. Imagine a shopping basket. Instead of buying one single apple, you buy one basket that's already filled with hundreds of different kinds of fruit. With one single purchase, one click, you're invested in an entire market or an entire industry. It's that simple.
And the benefits here are just huge. You get instant diversification, which is the golden rule of investing for a reason. It spreads out your risk. They are incredibly easy for beginners to understand. And because there are so many of them, the competition keeps the fees super low, which means more of your money actually stays in your pocket, working for you. Okay, our third option is for anyone who's feeling a little overwhelmed by all this and just wants a set it and forget it approach. Let me introduce you to the robo-advisor. A robo-advisor is pretty much what it sounds like. It's a smart, automated service that does the heavy lifting for you. You just answer a few simple questions like what you're saving for and how much risk you're cool with, and it builds and manages a complete portfolio for you. It is basically investing on autopilot. Now, a really quick but really important timeout. A lot of beginners are curious about crypto, and that's totally fair, but it's crucial to understand the difference in risk. ETFs are all about building a solid, diversified, steady foundation. Cryptocurrency, on the other hand, is a high-risk, high-reward game. The golden rule here? Only invest what you would be totally okay with losing. It can be a small part of your strategy for sure, but it shouldn't be the whole strategy. All right, we've covered the why and the what. Now for the fun part, the how. Let's put all these pieces together into a simple, actionable plan you can literally start today. So here's just one example of how you could break down that first $100. Maybe $50 goes into some ETFs for that core, diversified growth. $25 into a robo-advisor for that easy, automated approach. Maybe a small $15 slice into crypto for that high return potential we talked about. And finally, $10 into a micro-investing app to help build the habit. Now, this is just a template, but you can see how you can spread your bets and test different strategies right from day one.
And that really brings us to the single most important message of this whole explainer. It's not about the first $100. It's about the $100 you invest next month and the month after that. Consistency, that simple act of showing up again and again, is the real engine of building wealth. And finally, as you get started, just try to keep these common beginner traps in mind. Don't put all your eggs in one risky basket. That's just gambling. Don't chase those get-rich-quick promises. This is a marathon, not a sprint. Always keep an eye on fees, because they add up. Check in on your progress, and have a rough idea of what your goal is. It'll keep you focused on the long game. Because when you boil it all down, investing that first $100 isn't really about hitting the jackpot. It's about starting. It's about taking that first step, building good habits, and putting that incredible power of compounding to work for your future. So really, there's only one question left. Are you ready?